I think the prospects are extremely good. The relationship in the paper markets is quite simple. When gold starts running higher, silver runs almost twice as fast on average. So now that we see that gold is breaking out into the upside, we're talking about the price of it in dollars, then on that basis, I think we could well see that silver might catch up and run back up to that $26 level.
The GDX has rallied 14% in a week. Gold has moved up to new all-time highs. Silver's looking better. It has been quite a sea change in the last couple of weeks.
In today's show, two financial experts, Alasdair Macleod and Michael Pinto, talk about the recent gold price breakout and share their price prediction for 2024. Pinto explains his price targets and where he plans to get in and out, while Alasdair Macleod exposes a massive bull case for silver for the next year. If you're into commodities, this video is for you. Hit the like button, smash the subscribe button, and turn on notifications bell, as those who watch our channel make better decisions as they're better informed. Enjoy the video.
Mind-blowing to me still, after doing this as long as I have, from a week ago, and people mad because gold's not going anywhere and there's no open interest and it's just going sideways. And then all of a sudden you string a couple good days together and everybody's to the moon. It's going to 3,000, and it's, come on, that's not how it typically works. Though the chart, I'm sure, is instructive as you look at it. You and I have talked a lot about this range that gold has been in for better part of 3.5 years. It's finally now busting out of that range and moving to new all-time highs. My experience has always been anytime you get a new all-time high, like you said with NVIDIA, you get this rush of, okay, now it's time to get in because of the positive headlines and everything. So I would imagine there's still some more upside in gold here. I don't want to chase, though. I'm not this to the moon kind of type. That's just not the way this market operates, right? You get these ebbs and flows and the spec money rushes in and then it kind of runs out and it washes back. And, we call that kind of a spec wash and rinse. We're probably due for something like that. You get these steps higher. To me, what you've laid out, I'll watch 2150. And when the time comes we get through there, I will then jump on board again and look for that move to 23 and then 27. That all seems to make a lot of sense. Lower than it was 20 years ago. So, that kind of skews, this as a proxy. But nonetheless, hey, something caught my eye. You're zooming in on it right there. Look at that. 1 week ago, I think it was 1 week ago today, that Wednesday. Look at that island reversal down there. Little double bottom. And then, look at the second one. Look at that little island gap down and then gap back up. Yeah. And we've been rolling ever since. Back above or battling its 200-day moving average as we speak. Again, it's difficult not to chase, right? And especially when this thing is still under $30. What are some levels for people to watch if they want to start employing some money to the sector? 30,000 foot picture. I know you're watching these markets every single day. You've got your best assets now, the worst assets now. And let's look at the general equities markets. What appears to be certainly not an interest in value. It's all about growth. And, if you're not doubling your money in a week or two, you're really missing out. I like to joke that, they talk about fear and greed in the market. The only fear right now is a fear of missing out. And it's been that way for quite some time. Whether it is NVIDIA, whether that's reflected in something like Bitcoin, where do you see the markets in general? How do you fight the urge not to short it? I look at like that NVIDIA and it's going parabolic. And so, at some point, it's going to have a sharp pullback, so you want to buy some puts, but at the same time, I wanted to buy puts a week ago. Yeah. So that doesn't work. How do you manage that, emotion of wanting to take the opposite side?
On today's market recap, silver surge sparks speculation over potential super squeeze. Silver has recorded its largest gain in months, sparking plenty of excitement on social media and other investment platforms that the move may be the start of a prolonged price rally. Alasdair Macleod highlights that silver is not Bitcoin, but while supply and demand fundamentals explain much of the move in Bitcoin, it's drawing along to suggest that has implications for the silver market market. There's no halving of supply impending, while demand is largely reflective of trends in industrial and jewelry manufacturing. Alasdair Macleod also talks about the gold rally, but the move in precious metals comes across as momentum rather than fundamentally driven, at least in the near term, meaning it could reverse just as fast as it started. Gold and the silver price have been surging in the last several trading days as markets expect the start of rate cuts, which is driving cash from bonds to commodities. Now we'll show you more clips of Alasdair, but first, like, subscribe, and turn on notifications. Also, check our link in description for some massive sign-up bonuses. Enjoy the video. But first, like, subscribe, and turn on the notifications bell so you do not miss out on our daily videos, and check our pinned comment for some very special sign-up bonuses. Enjoy the video.
I mean, silver basically, once gold starts running, you'll find that silver runs approximately twice as fast. The problem with silver is that when gold is not running, I mean, gold can be moving sideways, then, the price can decline. And we've seen this. I mean, we saw silver running back down to 22, 21 something, having been up to 26 when gold first hit that high at, I think, 2070 in August 2020. It's a difficult one. I think the problem also with silver is that no central bank regards silver as a monetary metal for the purposes of its reserves. It is an industrial metal. Now, I would argue that as an industrial metal, it's actually got enormous qualities. And on that basis, I would think that the price here is too low. Gold is a pet rock. It's all, that was all yesterday's stuff. And because, I mean, this is propaganda, which has been put out since 1971 to try and establish the dollar's position as the reserve currency par excellence. And so now, I mean, there is a sort of growing realization, and has been for a few years, that the current fiat currency situation allows governments to print like billio. Bitcoin came along, and that's now meant to be the alternative. But I mean, quite frankly, when you look at Bitcoin, what does it correlate to? Does it correlate with gold? No. But then, hodlers would say, well, no, it's the new gold. So of course it's not going to correlate with gold. But I tell you what, I put together a chart, which I think you've got a copy of. Basically, what I did was I put together 7 tech stocks, and there's, if you like, the monikers are down there on the bottom in the tech index. And I rebased it to 100 on the 24th of February 2020, which roughly is when the bull market, this current bull market phase started, both for these tech stocks and also for Bitcoin. Now, Bitcoin is a red line, and you can see that up until, I think it was about October 21, there was a bull market in both. The correlation was perhaps not all that tight, but you can see that underlying bull market. And guess what? They turned at exactly the same time and then started going lower with a reasonably high level of correlation. And the bear phase then ended, and it then turned round a year and a bit later. I think it was October the 22nd, that second dotted line. And then we go into a new bull phase, and the correlation is there. And if you look at the correlation in the last few months, I mean, it's very, very tight. So what does that tell us? It tells us that Bitcoin is behaving like a tech stock. And what's been driving tech stocks? Well, tech stocks are in a bubble. I mean, I would contend they're in a bubble. And if you get higher interest rates, as I've just described, then tech stocks are going to crash. It's as simple as that. So where does that leave Bitcoin? Does it leave Bitcoin with this sort of wonderful idea that, because the dollar's going down and it's being printed in ever greater quantities, that, it's going to go to 1 million or whatever? I mean, this is what the hodlers tell us. No, it's a tech stock, for goodness sake. It's mirroring the bubble in the tech stocks. So when the tech stock bubble bursts, I think you'll find that everybody who's in Bitcoin, and this has incidentally been hastened by the new ETFs, Bitcoin ETFs, which allows hedge funds and managed funds, if you like, to speculate in Bitcoin, whereas before they had difficulty persuading their compliance officers that this was a good idea. Now, of course, they're listed. You can go in and you can buy the things, you can punt away, and my goodness, look at the volatility. Isn't it wonderful? I mean, if you look at it, it's just shot up from something like 200 in recent months on this scale up to close to 350. I mean, that's a tremendous move. Wonderful stuff. And if you can leverage it, so much the better. But all these bubbles do come to an end. And what this chart is telling us quite clearly is that Bitcoin is a tech bubble. It's as simple as that.
What do you think of Alasdair Macleod's take? Do you agree with him? Is silver the opportunity of a lifetime, or will Bitcoin outperform everything? Post in the comments section down below your opinion. Subscribe if you have not yet done so, and check this video right here because you'll love it. I see you on the other side.